Welcome back. Hope you're having a good morning. Well, to help us out with some analysis on the stocks that we just laid out for you, we have Prakash Diwan who joins us on the show. Hi, Prakash. Good morning. Good to see you in. Well, what do you make of a couple of these nifty earnings that we got? ONGC, how do you think those numbers were? And also Tata Power, actually. There were some brokerages that have gone ahead and downgraded the stock. Your view on it?
Good morning, Nigel. So let me take Tata Power first because I found the numbers pretty interesting, and the view therefrom is quite opportunistic for people who don't have it. Now, if these downgrades or reduction in price objectives is an opportunity for people to get in, I think it will prove to be an excellent turning point of sorts, because whatever has happened is a very short term kind of a impact that the numbers reflect. Whereas if you look at the way the company is kind of growing rapidly in most of the areas which have enough headroom for growth, it's just a matter of time before they catch up. What's probably impacting Tata Power in terms of flexing itself to grow faster than what the street would like to is the fact that they still haven't had that deleveraging impact which was anticipated, and it's probably got deferred even once more. Interestingly, the stock has run up in the last 2 quarters. From the last results to this result, if you see, it's a significant move. So probably that's one of the reasons why the expectations were built up a bit highly, and sense that that sense of disappointment that kind of seems to have crept in. But I think it's a great opportunity to buy into a company that has many more legs and is growing very rapidly. It's going to outperform most of the sector. ONGC, I think, is a steady state, Nigel. There's nothing very, in fact, given the fact that it's operating in an environment where oil has been fairly benign, they managed to do well given their large balance sheet and the large P&L that they actually report. But I would believe that if you look at wherever it is, whether it's the operating profit margins or whether it's the revenue growth, all of that's been fairly decently moderate in that zone. Most of it seems to be priced in, to be honest. So it's not something which is going to set fire to the stock or something, but it continues to reinforce the fact that these businesses, oil marketing companies, upstream oil companies, exploration businesses, all of them will continue to deliver even going forward. This quarter doesn't change the investment thesis from the long term.
Okay. The other stock I had to ask you was Hero MotoCorp, Prakash. The numbers look pretty good. I mean, 20% revenue growth, margins have improved, but the stock has also gone up, right? It's a 60% rally that we've seen in the last 6 months. You think there's more scope for upsides here in Hero MotoCorp?
Good morning, Sonia. So I was anticipating this because, on Friday, we all went into the weekend with the expectation that Hero MotoCorp numbers should be good given the fact that the way the stock was behaving. And I think the numbers will support that enthusiasm for two reasons. If you look at the setup, the rural economy-based growth that you would anticipate in some of these stocks, some of these businesses haven't really got completely triggered. I mean, there's still some time. If that were to happen, all these stocks would rally far. Hero MotoCorp would rally far more than some of the other names. While TVS is focusing more on the side, Bajaj is on the export side. Eicher probably has its own, strength in terms of some of its new launches. Hero MotoCorp is the mass market, player where there could be some benefit that could be disproportionately favorable. And my sense is these numbers will support that. The important thing is the margin improvement. In a market like this where you don't sell too much as the industry could expect, you at least make sure that your margins are in place, Sonia. And that's the tough part. Once revenues build up, once the unit numbers go up, then automatically, your bottom line is kind of padded with much more comfort. So I would believe while the stock's done quite well, and it's actually a catch-up after the other 2-3 names did well, it still has some journey to make. I would be quite positive on this name after the numbers.
Just a few names. State Bank of India, technically there seems to be a bit of a breakout after almost 15 months of consolidation. Last 2 days, the stock has done quite well. And I just want you to comment, I don't know if, if something is happening on Yes Bank. A lot of interest, humongous volume, stock has done what it has. Anything you're picking up there? There is that HDFC entity is allowed to buy so-and-so percent, but is that the really doing it for Yes Bank or is there something else? Go on, briefly.
Good morning, Prashant. So, Yes Bank is something which is a clear manifestation of the FOMO that exists in the market. Of course, the FOMO seems to be ebbing a bit now with every passing day. But, if you recall the way, Vodafone Idea and Suzlon performed, it was not surprising people would start looking for the next turnaround or next kind of multi-bagger from one of these dead and out kind of stocks. And Yes Bank featured a lot in those discussions, right? What's happened is that this anticipation that SBI would want to look for an exit and that would be an overhang on the market actually went out. And the moment the HDFC entities were allowed, it kind of started looking like offering a backstop to what Yes Bank could do. And that's where it's coming. But look at the numbers. It's still, according to me, it's still valued all the potential improvement that should happen to justify this level. So I'm not a big believer in hope stories. So there is a lot of hope built into the price. There's not much of change in fundamentals from what I could make out. On SBI, I think, Prashant, it's a very clear re-rating that's underway for all PSBs, SBI being the biggest and the most promising. The results seemed tepid. People were slightly disappointed on that particular day, but look at how the stocks responded. It was positioning. Nobody anticipated very great results. And in fact, there was a little bit of an anticipation that this could let people down after the numbers came through. But the commentary has been fairly positive, and they've promised that they've shown that promise that they'll be able to build from here on as things look up and improve. So I think it's more of a re-rating that was kind of overdue. And it's more money moving from private sector banks to the PSBs, and that's largely been the case. So it's more of that. I don't know how long that lasts because it can't go on the way it's done for the last couple of days. We'll probably start consolidating and go through a time correction.